Good morning. So this video is going to be a continuation, part 2, or an extension of the previous video. If you haven't already watched the previous one, please check it out. Will most likely be listed in the description. So this is the 1 hour chart of the dollar index. Of course, I've already highlighted on a higher time frame how we respected how the bodies were still inside of the daily buy side imbalance, and how we respected certain order blocks and new day opening gaps on the high time frame. So I'm not going to go over that now, but I wanted to point out something before London session opens. I was looking at these levels here. So this is the price note tool on TradingView, which allows you to see the exact price point of a candlestick: high, open, low, close, right? The opening price, the low, the close, and the high. So I wanted to see what this high was, right? And we have it at 105.206. But I was also curious to know what these highs are, because they look relatively equal. And let's start with this one, and I notice it's 105.206, and I'm guessing this one is the same, 105.206. So if you were a scalper, you already have a very clear target using ICT's concept, because we have very equal highs, not relatively equal, but perfectly equal highs. And I don't think that's a coincidence, and I don't think that was done unintentionally to see all these equal highs. So right now, if you were to ask me what's the drawing liquidity, I'll definitely say these equal highs. So this is the first thing I wanted to point out on the dollar index. The other pair that I forgot to point out is it's gold, XAUUSD. Of course, I was bearish on gold, just purely using the dollar index. Starting with the daily chart, we can see we have a sell side imbalance residing here from this candlestick's high to this candlestick's low. I didn't mind us trading above it. I also wouldn't have worried for as long as we didn't close above the fair value gap, which we didn't, right? But I had a condition for me to close the trade, which was that I was paying attention to this swing high. We have a candlestick high and the two candles next to it being lower than this high. So this makes this a swing high. And you can see on Monday we closed above it, on Tuesday we closed above it. So I didn't like that price action. My entry was exactly when we took this buy side liquidity, this swing high. That was where my entry was, because I was looking at it from I believe a 9-hour chart. Yeah, a 9-hour perspective. I was looking at this fair value gap. So I wanted to see these relative equal highs purged, then immediately reject back into the range, and then start falling off the rest of the week. So when I believe I was in a 5 minutes chart, my stop loss obviously was like was at the candlestick that started the fair value gap in the first place, was at this high, this swing high over there, but I moved it to this high, the one that started the fair value gap. And then when I saw Tuesday's price action doing what it was doing, I moved my stop loss from this high to this high. Right now I was paying close attention to it on a 5 minutes chart, keeping in mind that my entry was essentially at this buy side liquidity, this line, this white line. My entry was here, right? Was when we took out this high. I got in here. So keeping in mind that we traded on Tuesday morning at 2 a.m. we traded below my entry, and I could have easily terminated the trade because of the closure above the daily chart, the candlestick closure above my entry, which I didn't want to see. So I could have terminated the trade here at break even, but I didn't do that. So when Tuesday's price action printed, I finally moved my stop loss to this high. And of course, gold being the extremely manipulative pair it is, we continued moving in a gyrative manner. I decided to look at this level, the swing low, and I saw that we had a valid market structure shift at this point, even this point. So I decided to move my stop loss to this swing high, and of course we can see what happened. Price went down into a little bit of a lesser loss, but eventually tapped me out and started falling off from there. And if I had left it during Asia session, because I now then moved my TP, my take profit, to break even, I basically moved my take profit to this level where it was in the morning yesterday, so that when price was ever to return to that point, terminate the trade. And we can see we did that at 2 p.m. New York local time on Tuesday. So in the PM session we got there, and definitely today in the Asia session we definitely purged it. So this also gave me a little bit of a loss on top of the Aussie trade that I took. To show you where I got tagged out on my MetaTrader, let me see if I can pull it up. Looking at my MT5, we can see where my entry was at this point when we took out the buy side liquidity, and can see that at this point it was below my entry point. So at this point I was seeing some profit, and yeah, so this was where I got stopped out eventually. It wasn't at this point as I thought, it was actually here. So at this time, just take a look at how price already fell off, how much it fell. So I wouldn't think that it was possible. I wouldn't think that it was possible for us to return all the way back to this point, and we can see how it perfectly took me out before rejecting. So in hindsight, I could have kept my stop loss at this high still, or even at this high, and keep it safe. Right? In hindsight, I could have done that. But my mind was telling me that we have a balanced price range with this BC residing here from this candlestick's high to this candlestick's low. We also have this CB on the right, so I thought price would use this to respect for lower prices. So that's why I put my stop loss just here. I didn't actually think of an ideal level, because even if this was an entry for somebody, their stop losses wouldn't be here. The stop losses would be at the swing high. So I don't know why I put it there, and I took a loss as well. So I could have broken even on that trade, but I did not, for reasons that I just mentioned. The next ones I wanted to cover was the indices, which I haven't paid too much attention to because everything went just perfectly. So I've always been screaming for lower prices. Let's start off with the Nasdaq on the daily chart. Of course, we know that my target are these relative equal lows with this higher time frame buy-side imbalance. So I paid attention to this volume imbalance residing there, and looking at the charts at the moment, again we do have a market structure shift with this swing low. Pull a line there, we have a valid market structure shift, but I wanted to see if we could create one with this swing low, with last week's low. I wanted to see if we could close below the low. We haven't done that yet. Today is Wednesday. We have a possibility of finally closing below this swing low, and it might show us willingness to take out this sell side liquidity. And if it does show heavy bearish signs of sweeping this sell side and this sell side, then of course my target would still be these relative equal lows. At the moment, what do I see as an entry on the Nasdaq? I'm still looking at this sell side inefficiency, moving lower, I say I haven't been paying attention to this because it hasn't been moving perfectly hand in hand with the dollar index. We also have this order block that was respected twice. Yesterday was the second time. This was on Monday, this was yesterday. We spiked lower, created a new low of week. So I'm thinking on the indices we might create a new high of week, sweeping this buy side liquidity before returning for lower prices. So we might get something like this for FOMC in the PM session, and of course continuation to the downside. We will see how much, let's just set an alert on that. We will see how much movement this actually causes, but I still ideally would like to see a market structure shift from this low so we can trade it on Thursday and Friday. But I'll still be paying attention to these highs on the Nasdaq and this fair value gap to take price lower. Moving on to ES, to E-mini S&P 500, we've got the exact same structure, with the difference being that I mentioned many times again and again. Watching my previous 3 videos, you will notice that I still wanted to see us tap into this order block. I think on a 3-hour chart. No. From a daily chart. So same thing on S&P 500. We still haven't closed below this low. We've traded below it, but we haven't closed below it. And of course the same inefficiency in a form of a volume imbalance was also tapped into, and yeah, respected, pushed higher, and now I'm pushing lower again. So what's my entry? I'm still looking at the same levels. I'm looking for today to create the high of the week by tapping into this imbalance, this sell side imbalance, with an order block there very quickly during FOMC, tapping into this order block and then immediately rejecting lower without giving a chance for a re-entry, probably till 30 minutes after FOMC release. So that's what I'm looking for. I'm looking for a move like so, tap into the order block and fall off. I've already done an in-depth review on this on Sunday. If you watch my video from Sunday, so about 3 videos ago, you would see where I pointed out what I was looking for on S&P 500. I believe that should be all, but to go through my list again just to make sure, I have already covered USD CAD and what I was looking for on the previous video. I've also covered GBP USD and what I'm looking for this London session, actually in about an hour and a half now. And yeah, I believe that's all I have. I might consider a live stream for FOMC in the PM session, but we will see how that pans out. For now, that's all I have, and as always, good luck and good trading.